the fear meter. So, I mean, we've talked about this before. There's a meter in the in the economy and in the Bitcoin and crypto ecosystem about fear versus greed. Where are we there?
Oh, fear.
Um,
I mean, I think the last few days, like around the time we're recording this, we went from euphoria around when the time the ETFs were released to kind of sideways for a few months to fear the last few weeks or last few days, and a lot of that is coming out of Japan.
so talk about that.
Economies work in cycles, and one of the most important functions of those cycles, because of the fact that the government controls the printing and the amount of money in circulation, is what the Federal Reserve of the United States chooses to do as the largest of the world's government banks. And the Federal Reserve basically sets monetary policy, the most important being the Federal Reserve, the short-term rates, the rates at which banks can lend to each other, among other things. And these rates basically can cause money to enter into society at a faster rate, or pull money out of society, and they can change the rate of that. And that velocity of money is a huge factor in how these cycles work. Now, there are a few other things that matter here. One is that's not the only key tool in the Federal Reserve's toolbox. They also have the ability to buy assets. So if you remember, during the lockdowns, interest rates got so low that you effectively couldn't lower interest rates unless you started giving people free money, making them negative. And so what they started doing is buying assets. Okay. So when they started buying assets, and when you buy bonds, right, you're creating demand for the bonds artificially. That drives the price of the bonds up, right? When bond prices go up, the rate of the bond that the bond provides effectively goes down. Bond prices versus the rates move in opposite directions, right? So by buying those bonds, creating artificial demand, they were actually driving interest rates down even closer to zero than where they were, right? And in some ways even negative, depending upon how you look at it. So they have that trick in their tool bag. They have interest rates, right? And they can also coordinate with international governments or treasury, right? So there's other, so they have some tricks there. Japan, as some of your viewers may know, basically had a multi-decade deflationary hangover from its exuberance from the 80s and 90s, and their interest rates have been near zero for a very long time. Okay, and so this created an opportunity for traders to potentially look at free money, because they could go into the Japanese market and borrow dollars or yen in this case at very low rates, right? Even if they're going to invest in dollars, the cost of pegging or hedging the interest rate or the currency fluctuations is relatively low, and then invest in other assets that would generate cash flow, or potentially Nvidia. It turns out people
Seems like a logical thing to do.
very logical thing to do, especially if your only goal is to make money. So this arb trade is known as a carry trade in the hedge fund world, in the trading world. And this has been going on for a long time, to the tune of probably trillions of dollars. I've heard numbers as high as 20 trillion. I don't think it's that high. I think it's probably a fraction of that, but certainly trillions, single digit trillions. That's a lot of money. So last week, the Bank of Japan announced that they were raising their baseline interest rate by 25 basis points, or a quarter of a percent. And that sent shockwaves through the investing world, because not only were investors taking advantage of this, they were leveraging themselves. Okay, so when you are levered, right, a small loss gets magnified.
Yes.
Right. And so the idea here that all of a sudden, if you're buying an asset, leveraging that asset to borrow more money in Japan and doing it over and over again, we don't know how far the leverage went. But what we do know is that the unwind started last week. Okay, and it went into overdrive on the first weekend of August. And
So connect that now to Bitcoin for us.
sure, as the market basically becomes fearful, and traders, hedge funds, whoever becoming fearful, this will have an impact on all risk-on assets, because people are basically fearful that this unwind is just going to push people towards cash and cause a flight to safety, and everybody's going to be selling, and it just kind of propagates and it becomes its own thing, right? And so that weekend, this past Sunday, when in the U.S., which is morning in Japan and Asia, immediately we saw a big drawdown, one of the biggest we'd ever seen, as a matter of fact, in the Nikkei.
So people are selling assets to get cash to cover their shortfall.
Yes, or they're fearful that they may basically be suffering from the hangover of what everybody else is doing.